Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
All right. Hey, guys. Welcome back to our show. I'm your host, John Harcar, and I'm here today with Emmett Dempsey. And what we're going to talk about is ways to buy real estate outside of the traditional ways we always think about. Remember, guys, at Investor Fuel, we help real estate investors, service providers, really all entrepreneurs 2 to 5x their business by providing tools and resources to grow the business they want to grow and in turn live the life they've dreamed of. So, Emmett, thank you for joining our show.
Thank you for having me.
Yeah, I'm excited to talk about some of this stuff. You know, there's always, the mainstream ways we think about buying properties, but, now it seems like a lot of alternative things are coming to light. But before we kind of get into all that, why don't you tell our audience a little bit kind of about you, your journey, what got you into real estate and what got you here?
Outstanding. Will do. Well, Emmett Dempsey, in Port St. Lucie, Florida, where the Mets have spring training, which just ended, thank goodness, because traffic is awesome.
Are you a Mets fan?
I guess if I have to be a baseball fan, I'll root for the Mets. But I'm a
Go
football
Dodgers.
fan, and I coach my kids' flag football. I'm more excited about that.
Awesome. Yeah, flag football's blowing up, which is really cool. But continue.
No worries. Yeah, because I grew up in Port St. Lucie, went to college, Pennsylvania, went in the Army. I'm a former Army officer, spent a year in Korea, 3 years at Fort Bragg. Excuse me. Sorry. Potential spam, I love those. Okay. Anyways, so jumping in airplanes, and Army officer. I've been in the mortgage business since 2007. Opened my own company, Treasure Coast Mortgage, in 2020. So, and I'm a wholesale broker, and my business is mortgages. But also key niches are real estate investors. My wife and I have bought Airbnbs, and we have our own properties. The latest one we have now is in Kentucky on the Bourbon Trail. So, financing those has been key for us. My wife is a company owner herself. She owns a processing company for my companies, other companies like mine. She's in 10 different states. She does more loans than I do. So.
Oh, wow. Very cool. I like to ask this question to folks because I like to see where that influence. Now, you were in the Army, and thank you for your service. What prompted you to get into real estate or even mortgages? I mean, did you have any family influences? Did you have like someone that you looked up to that was doing that? I mean, tell me a little bit about that entry.
No, like most people, we always joke, I totally went to school for that. We all backed into it. It's
Right.
always, at that time, I was in hotel renovations. I actually built homes for Lennar. And
wow.
then 2007, basically right before the crash. So I got in 2007, and they were hiring. I worked at Countrywide Full Spectrum Lending at the tail end of subprime. So I had front row tickets to the Great Recession.
Mm-hmm.
So saw the loans that were being done, and like, oh, really? Stated income and pay option arms and all the things. And then in August of I started in May of 07, and August 07 is when everything shut down. And then 08 transitioned to Bank of America and back into FHA. So it was interesting to see that transition, and I've just been in mortgages ever since.
Okay. So during that crash time, the 08, you were working for these mortgage companies. any specific way that you pivoted in your business after that, maybe to do something different?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Well, yeah, I mean, I worked at a small brokerage, and I went to work for a lender, like a call center lender. Then I worked my own mortgage branch in the retail side. And then in 2020, I became wholesale, which is on the broker side, because they blamed everything on the brokers. And when they rewrote all the rules, all the lenders, kind of stuck it to the brokers. So we went from 50% market share down to like 7% or 2%. Now we're back up to like 25%. So I like being a broker because having my own company, number one, I don't have to work for anyone, but I work only for my clients, and I would offer different options. And and unique options. So for me as a veteran, of course, VA loans are very key. Also, reverse mortgages are a passion of mine. I think they're much maligned and really misunderstood. So I can offer great products there. But also your unique loans like your DSCRs and fix and flips and all the things investors need. And and I'll talk about more specifically a way that veterans can own rental property.
Cool. And how long did it take till you opened up your own brokerage?
Well, 2007 to 2020.
So, okay. Oh, so you had your own brokerage back. Okay, great.
Yeah, well, I opened it in 2020 is when I opened my own brokerage. Yeah.
Oh, got it. Okay, perfect. What were some of the challenges of owning your own brokerage versus being part of someone else's?
Well, all those things that happened in the background that you got to do. You got to do everything now. But once you get the flow and call reports and all the reporting and all your tech stack, you got to own now. But it's a choice. You can either plug in and cut your comp that way, or control everything, but you control everything. So,
right.
You have to decide.
Okay. So you went out and built this business. What does your team look like now?
My team right now is just me and my wife Cheryl. I've had other ones on my team, but we decided to move like a loan partner to her company because her company had more volume, and I run very lean. So I use a lot of technology, a lot of AI and things of that nature to streamline things, and I don't need a ton of staff. There's other mortgage models that have giant teams. I'm not one of those guys.
Yeah, and it seems like a lot of people now would rather have a small, slim, streamlined team versus all the headaches of a big team. Yeah. So at this time, were you and your wife doing any type of investing on your own? Any type of, I think you mentioned maybe Airbnbs, something like that?
Right. I mean, we bought a condo and Airbnb'd out the main one, and our son was in college at the time, and he stayed there for free. So it kind of paid for itself, and then he graduated and we sold it. And, and it's good that we did, because a lot of your assessments on condos in Florida have their own unique issues. So that was starting to rear its ugly head, and we sold before that happened. But and Cheryl and one of our friends and business partners bought a good opportunity in Kentucky, and that's what we were working on now. But I do a lot of mortgages for investors who are looking to buy standard investment debt service coverage ratio, DSCR, and things like that.
Got it. Okay. Are you still buying any properties, or are you just strictly focusing on the mortgage stuff right now?
Right now, I'm really trying to get my mortgage business really consistently. It's been tough the last few years with rates going up, but there's still a lot of business out there. My primary focus is more mortgages. So
Got it.
And if an opportunity comes along, we'll take advantage of it.
And you mentioned with the rates going up and all those type of things, what other challenges maybe are you seeing right now, and how are you trying to combat those? Psychology,
because you have to combat the fact that 2s and 3s are not normal. And I started in 2007 when rates were in the 7s. And that was normal to me. So it was always, we went from 2007 all the way down to 2020 in a downward spot. Rates kept getting lower and lower and lower eventually. And then they got really low really fast. And then you brought forward
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
I'd say 3-4 years of production all in 2 years. And now it's like, it's basically, a stream of salmon. You took a bunch of salmon, you moved them upstream, and then you're waiting for salmon at the end of the river. Like, hey, where's all the fish at?
Right.
That's kind of what happened. That realtors and mortgage professionals are feeling it right now.
Yeah. Are you seeing any trends coming, anything new where it might be a change or, you might need to pivot some more?
Well, I mean, it's just bringing things out, that dusting off the old, like the 2-1 buy downs. 3-2 temporary buy downs are good to get into a good low payment. But I see investors are still buying because there's still a supply and demand imbalance, and there's still a lot of folks who want prices to crash or this and that. I don't see there's the demographic imbalance. There's more millennials and Gen Z that want homes than there are homes because you still have that 15-year gap of no building that happened after 2008 that you're still making up for. So those are the different trends. It's just getting into the market. And in fact, I'm hosting a class next week for realtors about the cost of waiting. Because one of the common retorts for buyers these days is, I want to wait. And you show that if you wait, okay, what if rates do drop? Okay, great, but yet that house is now appreciated to a point where it's offset that rate drop.
Right. You might wait for a little rate, but the price is going to go up. And I read an article the other day that, because of, the building boom, I think in areas like Florida, Texas, and others, there's a lot of builders that are just really giving a lot more concessions, rate buy downs and those type of things. Are you seeing that in your neck of the woods?
Yes, unfortunately. Builders are, they can just give the house away. Like, I don't know how long they can continue to do that. Like they bought a bunch of forward contracts for the lower rates, and they're giving away concessions. I mean, I know what even as a broker owner, if I go super skinny, I can't beat it. Like, I don't know how they're making any money. You can only cut profit for market share for so long. So that's economics 101. So we'll see how it plays out.
Yeah, and that's kind of exactly what the other gentleman said. It's like I don't know how long they could do that, and it is going to be a wait and see type of thing. So let's talk about a little bit about what our topic was today of other ways to buy properties outside of traditional ways. So just kind of tell our audience that maybe might be a little less knowledgeable. What are mainly the traditional ways that people buy versus your non-traditional ways?
Okay, I say assuming you want to be a buy and hold investor, you want to buy property to rent out for cash flow, right? So you do conventional. So let's say you have great income and you want to acquire property. It's at least, technically 15%, but realistically 20-25% down. And higher rates because it's investment property. And, if the numbers work, as long as you buy it low enough, and then it works. That's the traditional conventional. You qualify, you got to get tax returns and all the things. So that's one way. An easier way is called DSCR, debt service coverage ratio, based off the cash flow of the property. It's less documentation, similar interest rates, so that's one way to buy it as an investor. But one way we've been talking about, and you probably see it online, it's like if you're a veteran or your FHA. So as a veteran, you can buy like a multifamily property, technically. So you buy a fourplex, you live in one side, rent out the other three. That's technically your rental owner. I don't know, there's different areas of the country that are more prevalent for multifamily. And of course, you have to be single because, for me as a veteran, I wish I would have done that in my 20s. So before I had a family. If you plan it strategically, you really could. And even if you don't want to buy a fourplex, and I have a YouTube video coming out tomorrow about it. Basically, you acquire one property to live in, you live in it a year, then you buy another VA property to live in, and you use your other VA property to rent out. And then based on what's called secondary entitlement, you can buy multiple properties depending on the purchase price. So many veterans believe that you can only use it one and done, and no, you can use multiple times.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And now that the conforming loan limit is 806,500, it's crazy. Like, I remember it was 417 for years and years, and that's how the basis of the entitlement calculation. It's, we get into the weeds here, but I did a good breakdown on my YouTube video that's coming out tomorrow about it. And there's other older videos, but this one's kind of an update.
Okay. Well, let's break some of that down. I mean, let's jump into the weeds of all that. I mean,
Sure.
like you said, most people think that you can use a VA loan one and done, right? I mean, how can they use it multiple times to keep growing?
Well, yeah. So you buy the first property, and really VA is kind of about four, like, because the VA has a 25% entitlement, and the reason why VA loans can be offered with such good rates is that they guarantee to the lender a 25%. Insurance basically. Mm-hmm. So that's what the VA. That's why you can do no money down, because to the lender's mind, they're getting a 25% down payment because you're covering their downside.
Right.
So say you just buy a $100,000 property. So I wish you could, but just for nice round numbers. So you basically use like 25,000 of your entitlement, but you have your base entitlement plus your secondary entitlement up to 806,500, and depending on the purchase price of the next property, there's a math calculation, and I offered a calculator on it about that. So it really depends on what your goals are for that. Because if you're buying a more expensive property, you obviously use most of that entitlement again. But basically, you have like a bank of entitlement that you can use over and over again. So as long as the next house you're buying as a veteran is a owner occupied, you'll be able to continue to do that.
Okay. Are there any mistakes you're seeing people make when they're trying to use their VA for to buy properties?
Well, not using a broker and shopping around. There's a lot of veteran-friendly lenders that say we're for veterans, but when you do the math, their rates and fees can be high. So obviously, any loan you should definitely shop it around. But I think brokers have better pricing on that, and use a veteran-friendly lender to make sure about that.
For those that aren't veterans, outside the DSCR, I mean, are there any other options outside, for someone to use besides a traditional FHA type of mortgage?
Well, I mean, FHA is great. I mean, FHA is 3.5% down. You can buy a fourplex. Remember, single family is 1 to 4 units.
Right.
Like, we believe that single is single. No, it's 1 to 4 units. Mm-hmm. So you can buy a 4-unit property or a duplex with 3.5% down and live in one side, rent out the other. That's a common tactic that you can do. So that's one way you can do it. Also, last year I think it was, like, conventional changed our guidelines too, where for Fannie Freddie where it wasn't as much down. I think you can do it for as little as 10% down now. So it's or even 5% down. So, you can even buy conventional the same way. Like, you're buying owner-occupied multifamily with 5% down. That is for sure, but they lowered the investment portion of it too. So, all three, the FHA, VA, conventional, have options for investors to, as long as you live in the property, and multifamily is technically a unit to rent out.
Right. Got it. Okay. Through all your years of being a mortgage broker and whatnot, I mean, what kind of things are you seeing that, as you're pivoting and as you're growing? I mean, where are we going for the mortgage industry, right? I mean, we know there's a lot of things going on in the world. We know that no one knows what's going to really happen the next day from now. But how are you seeing trends in the industry itself?
Well, I mean, a lot of news last week with Rocket buying Redfin and buying Mr. Cooper. They want to control the end-to-end and remember, they bought Truebill years ago, where they want to have, if you're even thinking about buying a mortgage in the future, maybe, so they have it's about data. So if you're a mortgage professional or real estate professional, your database is the most important thing, and staying on top of your past clients, because what they want is a one-stop shop. And that's what they sold to their investors.
Right.
You don't spend billions of dollars to not control everything. They want to control from rocket money, as they call it now, to you get your mortgage, your first mortgage, and then your second mortgage, and then you have this. You service the mortgage now with Mr. Cooper. They just added 4 million new customers.
Right.
Like 2 trillion in mortgages, and it's crazy. And they're marketing engines, and with AI and things like that. So I have with my CRM some AI technologies, but again, with that we can compete. But that's also a good thing about mortgages, because even though we see Rocket Money, the Rocket only controls like 5% of the market. It's
Right.
still a very fragmented market that a good smart originator or a realtor can really do well. But you guys stay on top of your people and really manage your database well.
Got it. Seems like you've had a lot of success over your years, right? Seems like you really kept growth. What do you contribute your keys to success of staying on top and keeping up with the Joneses, I guess you could say?
Well, I mean, for me, I've been coached. I've been in coaching. I believe in it to structure your day. I think how you structure your time. It's the one resource we all share that you can't get back. I'm very specific on my theme days. I do certain things certain days. Mondays I call my realtors. At least 40 of them a day, and then on Tuesdays my updates to each side. And every single time they say, "Well, nobody really ever calls me. Nobody ever does this." So you can differentiate yourself by just being structured. Like today's Wednesday is my pal day, my pre-approved looking. So I'll call all my pre-approved folks who are out there looking, and their agents as well, and ask, hey, anybody else you're working with, and to ask for referrals. And then on Thursday is my data bank day, so I'll call like 2 letters of the alphabet from my past clients. Say, hey, how you doing? Just kind of reach out to them, stay top of mind. And then Friday's kind of like a wild card. I'll reach out to other partners, mainly these days like financial advisors, CPAs, and kind of other referral partners besides real estate agents.
That's a great little nugget right there. Really being structured, and I think it really comes down to working with intent, right? Knowing each day what you're going to do, it really makes your work go a lot smoother, probably. So if someone's looking for some information on like a VA type of loan or using that, like what advice would you give to them as far as, hey, this is how I'm going to get into doing this?
Well, I mean, have a conversation with a professional that you trust. Obviously, if you're in Florida and Georgia, I'd love to talk with you. It's just like, okay, here's where you are today. Here's where you want to go. Here's the possibilities. And the way that I present options, it's a program called Mortgage Coach. I believe in video, not only for social media and YouTube. That's been a great way folks find me, but also I call it tactical video. So I do one-to-one with Mortgage Coach, like, hey, hey Jim, here's what the options I see. So here's, for instance, unconventional. So if you put down 5% or 10%, and I did a few refis. Like a guy he wanted to do 30, 15, or 10. So there are options. So the way you present options and what's best for you, and I let my clients decide. But ultimately, having that client experience where you understand what is possible. So it's not just about just rates and fees. I mean, those are certainly important, but it's just about the overall experience and what's the total cost of this action.
Got it.
Because people they also get so rate focused, like the rate, because that's what our industry pounds them with, unfortunately. And it's about the cost too. It's different. Is a higher rate actually cheaper? Sometimes it might be. So having those conversations around numbers and a good platform that's mobile friendly is very key.
What do you think some of the challenges are in your business right now?
Again, it's really a psychology. I want to wait. There's a large. It's just there's sticker shock. We've had a huge increase in property values. So there's a narrative out there. Well, back in the '80s, rates were 20%, yada yada. But yeah, prices were also much lower.
Yeah.
So I mean, payments are higher. So the biggest thing is like, oh, I didn't think the payment would be that much. I'm like, well, math is math. That's just what's going to happen. But you can kind of show even a buy versus rent, and it's just having those conversations. Even a buy versus rent, you can spend, in 5 years, tens of thousands of dollars on rent that doesn't go anywhere, or you can, do amortization, just basic. Even if the appreciation zero, just by making your mortgage payment, you can make a payment one way or another.
Mm-hmm.
just understanding where you're at today, where you want to go. I mean, because the numbers play out. The survey of consumer finances, homeowners are 46 times wealthier than renters.
Right.
46 times. I mean, that's government data. So you want to wait and maybe lose out. There's also a report we do called a cost of waiting, and just based on where we think rates might go and general appreciation, historical averages, what you're losing. It's like, hey, I want to wait. Okay, well, you want to cut a check for 15 grand or whatever it is, like by waiting 2 years, that's what it's going to cost you to wait. So it's about having real conversations that to understand, like, yes, of course, I'm a mortgage broker. We get paid to do mortgages. Great. But, this is why you want to do that. And,
Okay.
I'm very, transparent by the way we do things.
Do you have, I know you missed like the videos. Do you have any type of coaching that you do for folks? Or is it this just kind of like when they reach out to you, you coach them on the call and those type of things? Like, do you have a coaching program, anything like that?
I don't. Like, maybe I should build a course. No, but there's no coaching program or course. I find I try and do videos on topics that they're searching for. My general, I guess, content buckets are VA and reverse mortgages, and that's on the other side of the spectrum. I think the reverse mortgages are much maligned and misrepresented, and I think that's a huge opportunity for seniors who are sitting on $14 trillion of equity, and what do they do with it? So that's definitely a good conversation.
Okay. How do folks find you? How do folks find these videos? I mean, do you have a YouTube channel, Instagram? I mean, how do folks get in touch with you to talk?
Well, I mean, Instagram is the best communication vehicle. So you just search my name, Emmett. It's not very many Emmets out there. Emmett Dempsey. So you Google my name, you can kind of see all my reviews. My YouTube channel is there as well. Those are more long form videos. I don't do any YouTube shorts on there. I do all long form there.
Okay.
But and I'll have some on Instagram and TikTok. I'll do like short form, bite sized ones.
Okay. Very cool. Well, guys, I mean, I hope you guys enjoyed this talk. Emmett, thank you very much for coming on and sharing all that. I hope you guys wrote down some good nuggets. And I hope you guys all had a great show. Emmett, thank you again. And once again, thank you for your service. And guys, I'll look forward to seeing you on the next one.
Thanks,
cheers.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.